Hello, everybody. I think we're live.
Good evening. Seems so.
Seems so. Seems so. All right. Let's hang on for a second and let it kind of get started. Get some people in, and then we'll get going. As usual, Rob, how are you?
Splendid. I have six working days left this year.
All right.
Yeah,
Well, rub it in. Why don't you?
I'm going to. I'm going to. All Christmas long.
Fantastic. Yeah, I've actually got a few days off. I think I got the second, third, and fourth off. The problem is that I thought that the fifth was a red day, but apparently not. So, um, for me, I thought it was going to be off for like 9 days in a row, but apparently I have one day in the middle that I have to work.
That sucks. That sucks.
It's I don't mind my job. It's fine. All right. Anyway, so for everybody who's here right now, today we're actually going to go over CPI because that came out earlier today, and we're going to be talking about Sam Bankman-Fried getting arrested as well, finally. And with that, we're going to kind of question the timing of it a little bit. But so I want to share my screen real quick and just show you what we're looking at right now. Here we go. I hope that's not too small. I'll make it a little bit bigger. So the CPI came in at 7.1%. The expectation was 7.3%, which is obviously good. It came in cold, which is 0.2% less than expected. And I think last month was 7.7%. So it came down pretty harsh actually.
That's 2 months below expectations.
Yes, and we do actually also we are extremely close to what it was a year ago. So year over like so we've seen this ballooning curve is what I usually call it. It's we peaked back in I guess this is June.
It was June, yeah. So
Yeah. Yeah, and it's been coming down pretty quickly. So I'm gonna actually leave it over to you, Rob, because you had a bunch of stuff there you wanted to talk about.
yeah, sure.
Let's see, here we go. My screen is on.
Yeah, basically this is just a big, huge overview of some of, not all, but some of the metrics that will go into making up inflation as a kind of idea about where we are going. So I've just got the last year's worth of data. So it starts around January. And so top left, we have oil and gas. Top right, there are various food products. So here I've just got wheat, soy, pork, and corn. Bottom left, we have metals. So we'll just put copper, platinum, gold, silver. And then on the right, we have the dollar and the Fed funds rate. And it's, you can see fairly clearly across the board that in terms of, if you're talking about sources of inflation, there's not really much inflationary things going on. Of course, obviously, inflation is still high because it's a year-over-year measure. And if we look at this year-over-year, you can see oil is 10% up. Gas is still, at this point, 70% up. Food still largely up, but only by a small amount. 25% soy, but pork is flat, wheat is up 5%, corn up 11%. It's not huge numbers relative to, obviously that is, double digit food inflation is high, but compared to where we've been, where you're talking about 60% up on wheat back in May since the beginning of the year, that was 60% in 5 months. That's a huge rise, and that has largely gone away. Metals had, were largely, commodities. This can represent were largely sort of deflationary throughout most of the year. We didn't really see much inflation from those, and that's really a sign of economic weakening when you see these commodities going down. And all in the face of it, you can see the dollar continuing to rise and the Fed funds continue to rise, chasing down basically these high inflation, high inflationary commodities. And it's, the trend is very much sort of down for energy, it's down for food, and it's it's down currently anyway, down for the dollar, down for inflation. Like, there's no real source of inflation left unless some sort of something unsurprising like a huge spike in the price of natural gas and oil, which
Hmm.
can't really be predicted. But it really does sort of lend to this idea that come April, May, there's a real possibility that inflation, particularly in the US, maybe not so much in Europe, in Asia, in other parts of the world, but particularly in the US, like inflation is really going to collapse to kind of negligible. I don't know if it'll get to 2% with various sort of sticky bits of inflation where prices don't really come down that quickly. Things like rent can tend to hang around much higher than people want them to for longer than people want them to. But on the whole, it's this trajectory of downwards facing inflation isn't temporary. This is inflation is dropping very, very rapidly, and on a year over year basis is likely heading pretty much towards zero.
Yeah, it's kind of mad how fast it's going down because it went up very fast and it's coming down equally fast, basically. And the worrying part about it for me is it, the Fed has been talking about holding. Once they do pivot with the rate hikes, we're going to have a rate hike tomorrow. The overall kind of uh, the overall I guess
Expectation,
consensus
is it? Yeah.
expectation is that it's going to be a 50 basis point hike, which is still a hike, but it's a lower hike
Yeah.
than it's been previously, which kind of signals that they're slightly turning a
It,
little bit dovish, sort of. And the thing is that even if they keep raising the rates now, and we're going to have this like maybe next month when the January numbers come out, and I'm going to go over when that's scheduled to come out later on, but we're going to have such a hard crash in inflation that it almost people would think it's a great thing, but if it crashes down so hard and so fast that once they stop, since it's a um, once you stop raising the rates, it takes a long time for it to kind of smoothen out, right? The
Yeah, well,
inflation itself.
the rates have a real sort of 6 to 9 month sort of lag on them. And actually, I have another chart just on
Hmm.
the screen. If you could put me back on,
Yep.
which so yeah, it's quite a busy chart. But if I just cut down, I'll cut some noise out. So if I get rid of
I
this
see you
and
have
this,
the Fed funds there. Could you make that
yeah,
maybe like yellow or something, just real quick, so it's
okay,
easy to see at that point?
just for you, I'll make it yellow.
Thank you.
There we
Yay.
go. So the green is the recessions, is US recessionary periods, and the yellow
Right.
is the Fed funds rate. And
Right.
as you can see, fairly, with some fairly consistent behavior, is that the peak, the time where they flatten off and go, oh look, we've stopped hiking rates.
Yeah.
The trouble comes after that,
Yeah.
typically.
Yeah.
The hikes come because they have to hike, and then they hold, thinking, "Oh, look at us, we've done a beautiful job." But
Hmm.
actually, what they're doing is they've built in a whole load of stress into the economic system, which then
Yep.
takes several months to play out. And then when it does play out, the Fed are then have to backpedal very, very quickly and start to chase, chase those that now deflationary events that happen.
Yep.
And this is this isn't sort of a one-off. This is a regular sort of behavioral period where
Hmm.
you hike, you hold, recession. You hike, you hold. Obviously, here this was back in the
Yeah, that was
1970s
a
in
complete
the
quick
Volcker
turn.
period.
Oh
Um,
yeah. Yeah.
so that was where he hiked into inflation, into a recession, in order to get away the inflationary pressures, and that's kind of the feeling that the Fed are trying to do now.
Yeah, I
But
think Jerome says he's a fan of Volcker.
there's one the big huge difference was that back here, US had a 30% or so debt to GDP ratio,
Yeah.
and now we're up at sort of 120, 130.
I think it was
Um,
137
okay,
if I
yeah,
remember correctly,
it's a
which is
completely different setup, and it's actually far more akin to. I don't know if this chart goes back that far. Yes, it does. It's the Fed funds rate doesn't, but it's more akin to the actual post-war period,
Hmm.
where coming out of World War II, where we had very high debt, and interest rates were kept low. Like I don't know exactly how low. Obviously, the chart doesn't
Hmm.
start, but interest rates were kept low during a period of high inflation, and that is obviously kind of bad if you're somebody who holds debt, if you're not getting the real return on that investment. So so the bondholders get crushed, but there was a kind of, I imagine there was a very post-war, we'll take the hit, we'll do what needs to be done to rebuild the world
Yeah.
kind of thing. And I don't really feel like we're in that sort of environment now. um, I don't
Yeah.
think there's much many people that are willing to take the hit for the government overspending for several decades.
Yeah.
And this, so here I can actually put on, so you can here see the CPI. If I put it to the weekly chart, maybe. So this is core CPI. So you see it's 6%. It's a little bit lower than
Hmm.
CPI, but you can see typically how well it follows the federal funds rate. So
Yeah.
the Fed funds rate, as the inflation spike heads upwards, the federal funds rate follows. And normally, like we kind of obviously haven't we've had a lowering of inflation for going back basically 40 years. Lower
Hmm.
highs, lower lows in inflation into a very sort of low inflationary period. And although I know a lot of people say, oh, actually, if you measure inflation by these metrics, it's much higher. And yeah, they're correct in some, they are correct in some aspects, but it's still true that food things that food technology, things like that, can massively increase yield without increasing prices. The amount of ease of doing business, a lot of technology brings around essentially deflation. It makes you be able to do the same thing for cheaper. And so we've had these decades long low inflation, and now you can see what a ridiculous anomaly this move
Yeah.
upwards is.
Yeah.
And it's similar to the kind of the 70s baby boomer generation coming into the workforce. That's what it's reminiscent of. But that was a period of uh, a lot of new entrants coming into the market, and with fresh new demand that was going to last years and years and years and generations worth. This was a post lockdown supply chain shortage driven spike
Yeah.
in demand. It's a
Yeah.
very different type of inflation.
Yeah, and it's kind of crazy when you look at the Fed funds, which basically represents interest rates. Uh, when you look at what we have now, and you go backwards, you see how kind of it looks like a computer has done it. It's like flat up, and then the further back you go, you see the inflation, the Fed funds starting to move like this a little bit.
Yeah,
It's kind of crazy to see that it's so much more planned out now. It looks so much more exact or
yeah.
precise now in the
Uh,
later years.
and I think this is kind of this is an argument of towards the whole financial world is moving into it's computer ran. It's not
Yeah,
run by people.
exactly. This is kind of what I was trying to say.
Yeah.
You can see the behavior just from looking at the chart. You can see how evolution has happened basically. But I wanted to share my screen for just a second here, Rob, if you don't
Just
mind.
say one more point to
Yeah,
say first though.
yeah,
It's is that it's worth noting how this, despite the sophistication on how these metrics are calculated and how we go about raising, lowering, holding rates, it hasn't led to stability.
hmm, no,
It's far from it. And
no,
yeah, it's now the Fed are really chasing something, thinking I think thinking they know what's coming, but arguably missing the mark on a lot of things.
yeah, yeah. It. I don't really know what to say. It is what it is right now, and we can just we're
Yeah.
kind of along for the ride. But I wanted to share my screen just for a second here because we touched on the core CPI, and just to make sure that people that are watching understand what that is, what the difference is. Um, the core CPI is where they exclude food and energy and other volatile items, as they call it, and then you can see the inflation of that too. So, but basically, looking at both is probably a good idea. The one that people care the most about is the consumer price index, the regular, the one that we were looking at earlier. This one here,
CPI.
because that means that the price of what you have the production inflation as well, which comes out. I think it comes out every 6 weeks as well. No, every month as well, but it's a week before the CPI. I can't
Okay.
remember exactly. I don't really look at that much. I will try to do that more often now, but and then we have the food inflation as well. You can find everything here on tradingeconomics.com. Um, and I also wanted to just go over the schedule releases for the consumer price index because it's it it might feel more important than it is to look at the CPI because the entire market is talking about it and everything. It's a good macro indicator, but for some people, it's a good indicator to look at like a quick on the day trade thing. So if you have the dates, you know when it's coming out. We'll try to be on top of that and release it as soon as it comes out on our Twitter and on Discord. So if you make sure you follow us there and join the Discord as well, so you'll get the updates whenever they are out. But the next one is going to come in for December. For this month, it's going to come out in January, on the 12th of January. And we'll try to be on that as soon as it comes out. I did want to show just real quickly, though, the charts here because the Dixie today, CPI went down, Dixie crashed down, which pumped BTC. You see this daily candle. And the last time we talked about BTC was on Sunday. And we were talking about getting through this pretty long-term trend line right here.
Yeah. Well, we
And
certainly got through it.
yeah, we certainly got through it with pretty. So far, the volume is just slightly higher than yesterday. It's basically just average. I'm expecting this to go up a little bit more before the day ends, obviously. But also, what I noticed was the RSI actually basically shot through the middle line on the RSI. So now if it holds above here, we're going to be above the like the bullish area. So usually when it's here, it might go to the top. So we might see a big pump. And I might add, I remember us talking about it going up, kind of ending up right here
Bearish. Yeah.
around and then kind of turning down. But that's just speculation. We don't know. We wouldn't even pretend that we know, but that's a speculation. The first scenario, okay, it went through it. Now we're just waiting for the next one to play out and see what happens. So yes. Let's see, what else did we have? Yeah, right. We wanted to talk about Sam Bankman-Fried being arrested.
Not so freed at the
Yeah,
moment.
and I just realized that the Twitter. Let me see if I can do this properly. What I just realized is that I sent some tweets over to you, Rob, just to look over, but I didn't save my own tab open because I am who I am.
Oh, I wouldn't
So,
change who you are.
no, but why is it not working? Okay, there we go. Now it's working. Here we go. Here's some paperwork. So basically, here's a statement where they basically, yeah, this is the proof.
Oh, so
They were actually
announced
arrested.
as arrested. Yeah.
Yeah. So basically, the American authorities has asked the Bahamian authorities to arrest him, and they did. The timing of this, I mean, look, I understand that a lot of people are happy that Sam has been arrested, because we've been asking for this for the past month. or
Asking
something
to
like
be
that.
held accountable, or at
Yeah,
least
at the very least, at the
some
very
sort
least,
of answering some real questions, not in
right?
a sanctioned interview off his own back.
Right, exactly. And there's been a lot of talk about, why has he not been arrested yet? What's going on? Why are we waiting for this to happen? And now it finally happened. The only weird thing about it, which there's a lot of talk about as well on Twitter and other socials, is that the timing is weird. He was supposed to testify in front of Congress. I think it was today or tomorrow. Where he can't really lie under. I mean, you can still lie under oath, but you wouldn't be very smart to do so. Um, and now that he's been arrested, apparently he can't go to and do the testimony.
Well, yeah.
It's a very very interesting timing, and
There's a point where the coincidences kind of, you have to start adding them
it's
up
too
and
many.
say
Yeah,
they start to become unlikely. Not
yeah, and
not wanting to delve too far into conspiracy theory, but yeah, if it smells like
if it smells
what it
like
smells like,
doo doo, it's probably doo doo.
yeah.
But yes, so basically, there was a bunch of chatter going around where people were connecting Sam to Sam and his parents, to Gary Gensler, to um, some some dude that I can't remember the name of, who happens to be Caroline Ellison's father,
Was it
and
Mr.
then
Ellison?
yes, I can't remember.
Mr.
Yeah, but
Ellison.
I can't remember his actual name now.
No,
That's
yeah,
um, and it's like, okay, so that there you have a circle of people that are kind of, that doesn't mean and doesn't prove
yeah.
anything, but
It's
it's a coincidence, and it's like, okay, that's one coincidence, all right, fair enough. And then you
mm,
have these other things that start coming up, like how Alameda was doing all these shady things, and then suddenly Caroline Ellis disappears and pops up somewhere in New York, apparently, when everybody thought she was in Dubai or something like that. Um, Pops up in New York, 2 blocks away from an FBI headquarters, um, and not being arrested either.
mm.
and then and then now this happens. So it begs the question: did she talk to somebody
Um,
when she was in New York? I mean, she was buying
I
coffee
mean,
at like a Starbucks 2 blocks away from an FBI headquarters in New York. I mean,
I kind of feel like
yes, it is
maybe
kind of a
somebody could
funny
bring her the
thing.
coffee, but um, I
Sure.
think it has to be said that the past few weeks of interviews that Sam has been giving haven't put Caroline Ellison in a very good light.
No,
I
and
think that's probably
he
an
hasn't said
understatement.
anything either. He's the only thing he said is, "Oh, I have no recollection of this," and da 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 da, which is why people wanted him to testify under oath. And now that
Yeah,
he's been basically, blocked from doing that by getting arrested just in time, it leaves a little
eh,
bit of a weird taste in my mouth.
yeah. Um,
It's
I think he was the sort of things that he was saying were around like, oh, yeah, I wasn't, I didn't, I didn't know what was going on at Alameda. I
yeah,
wasn't in charge of the money that's been sent there. I didn't know that that money was supposed to be separated. Customer funds and FTX funds were supposed to be separated, and it turned out that they weren't. Oh, how
yeah.
much? Somewhere to the tune of half. It's like, if you're a
Dude, you
CEO,
graduated from MIT and you're the
yeah, like,
CEO of
you're a
the
smart
biggest.
person.
You're not like, stop playing dumb.
No,
Like,
and it's like, how you managed to. So it's like you managed to accidentally miss the fact that 50% of your company's funds, who were customer funds, ended up at a hedge fund that you own 90% of, owned by your ex-girlfriend. And
it's
no, you please continue. Please continue to explain. I'd like more details, please,
Yeah.
because what you've given is not enough. So
Yeah.
I guess one way or another, if he's been arrested, at some point he has to stand in some sort of dock under oath. So
Yeah, unless
well, let's see.
not that it is what it is. It's just it feels ridiculous to say it out loud.
There's a point of conspiracy that we'll have to
Yeah,
wait until we get there before
and
broaching that.
what the hilarious thing about all this is that there's so many conspiracy theories out there that are just laughable, like flat Earth and all that stuff. Where it's like, governments are hiding this.
You think the Earth is round?
No, I think it's a spherical, which it is. It's not perfectly round. Thank you very much.
It's actually it's rounder than pretty much it's
cue
rounder
ball,
than a cue
yes.
ball, yeah. So
Yeah, which is kind of crazy, but still, it's not
Supposedly.
perfectly round. But okay, anyway, so the things we say, but no. So there's a lot of conspiracy theories that you really distance yourself from because it's just it's just complete BS and delusion most of the time. But then you come across these things sometimes where you're like, for example, for this, we know this space pretty well. I think together, me, you, and our associates in Crypto Talks, we have like probably close to 15 to 20 years of experience in these markets, in the crypto markets, like combined. Yeah. And we're nerds. Like, we're nerds. We read stuff every day, all the time. We don't stop. When you know a space this well and you understand kind of the mannerisms of the mass psychology inside of the space, and you start seeing these things pop up, and you're thinking, oh, wait, okay, this is starting to feel like I'm starting to feel like a conspiracy theorist. And I'm sitting here like, oh, dang, not me. But
I've been the conspiracy theorist of among my friend group for plenty of years, with just through Bitcoin, like just purely through crypto, and being like, this is how the money works, and this is where the money's going, and it's not good, and it's not in your favor, and everyone just kind of goes, right, okay, whatever, you just buy your magic internet money, and after a certain amount of period,
it's
time,
not a conspiracy
what you said
theory
happens
if it's correct. Right?
Yeah. No.
But either way, so yeah, I just felt we needed to touch on the whole SBF thing now that he actually did get arrested finally, and
there's a lot more to touch on.
Yeah, and it's funny to see that a lot of people were, like I said, they were begging for a month now, over a month, for him to be arrested. And now that it finally happens, most of those people are like, oh, that's great timing. Which is true. It is true. It's a weird timing.
We'll say that.
But at some point, we have to be happy at least for the fact that he's actually now officially been arrested. So we're moving forwards at least.
Yeah, well,
for now, yeah.
I imagine that however broke he is, he's still got bail money. So
maybe.
The rich don't go poor like the rest of us.
Yeah, us normies. No, oh god, no, we're not normies. We're Bitcoiners. The crypto.
No, well, we're way poorer than the majority of normies over the last 12 months. So
yeah. Well, all right. So I feel like we're pretty much done with these two topics that we did want to go through. I wanted to say hi to Dave, by the way. I saw you popped in there. Hope you're doing well. So I think we're gonna kind of round it off here. We want to try to keep these daily shows around half an hour. If there's a lot to talk about, and if there's a lot of questions coming in and everything, we'll probably extend them a bit more. But we're gonna try to keep them around 30 minutes.
Especially considering how easy it is for me and you to just keep on going and going and going.
Yeah, apologies. But yes, so we're going to round it off here, and please, everybody, remember to join the Discord, because that's where you can network with us. We're there all the time, hanging out. If you want to talk and have questions, we're probably going to be around to talk with you. And
if we're not around, just
discuss
ping
some
us
stuff.
because
Yeah.
we'll be around.
And the whole idea of Crypto Talks is to be an educational platform. So I'm more than a happy person to just sit down and help you learn TA and everything, because we haven't made those videos, we haven't released them yet. They will be coming out, a full series on technical analysis, what it is, how it works, a bunch of different indicators, how to read them, and all these things, how to use some of the tools and everything. And then we're going to do the same thing for on-chain analysis, teaching how that works, how to use Messari, sentiment, and all these things, and all the way over to the macroeconomic perspective and everything, which is basically what we usually tend to talk about in these shows.
That's where we end up. Yeah,
this is where we end up, because that's usually where the most interesting stuff happens. The short term is boring.
yeah,
But
yeah.
yes,
That's true. Yeah.
yeah. All right, so we're gonna end here. Thanks everybody for coming around. We'll see you. Make sure to subscribe and put the notification bell on and everything, and leave a like if you can, because that will help us out.
Yes. Thank you. Bye.
Cheers.